in general, not even in options, but in trading in general, nobody likes the lower time frame, especially newer traders, right? They're always like, oh, it's a little bit too risky, like it moves too fast. So they don't like the lower time frame, most people. But if you can learn the lower time frame and then you can actually like go sit down, back test, and then also forward test while you're at it, then you'll actually learn that the precision in the 1 minute time frame is the best precision you can have. When I started showing my trades live, I knew my win rate, I knew my risk to reward rate, and my win rate is about 57%. The problem is when you have a 57% win rate and you're live streaming, people don't like that because it's like, why don't you have 100%? You said you were a profitable trader. Well, that's not how trading works.
A lot of people, what do they like? They like day trading. They want to take trades every single day, right? So sometimes when you put on trades, they're not always going to be A+ setups because the A+ setups come once a week, maybe once every 2 weeks. But a lot of people are expecting A+ setups every single day. You're not going to get A+ setups when the markets are either consolidating or the higher time frame's not there, right?
I feel like on social media, a lot of traders are going to flex the win rate. I've been green for 3 weeks in a row. I haven't taken a losing trade in 3 weeks or 4 weeks. But it's like at the end of the day, the people that actually know how to trade, it's like, okay, sure, but what's your risk reward on those trades?
When it comes to stocks versus Forex, which is what I want to kind of compare, would you say it's equally beginner friendly? Because the barrier to entry is actually less. You need less capital unless you go with prop firms, and there are certain advantages, certain disadvantages. Using those two for a beginner, or if you were to do it all over again, would you still pick options?
The reason I think I didn't choose Forex was just because of like...
All right, ladies and gents, welcome back to another video. We are joined by Scarface.
Yes.
Damn, Scarface. You haven't said your real name, so we'll keep it anonymous, but you go by Scarface or Tony?
Most people call me Tony, probably.
Tony, okay. Well, Tony and Jack. Jack, you subbed in the last second, so I think we're gonna have fun, right? I like your boys' energy, and we're gonna have a cool chat. The first thing I wanted to do, which I've started to do on the pods, is this might be an hour, and that might be an hour and a half, and for the audience, it's a time investment. So I want to make sure that they get the most value, and I think the value always comes when we can respect the guest in the sense of, you know, these guys are legit, and we've spoken a little bit off camera now, so I want to give you guys the opportunity to say why should someone listen to you, because I think you guys are doing more than others, which is worthwhile, and therefore worthwhile for people to stick around.
Yeah, so for me personally, I started trading back in 2017. And since then, like, I've been on social media a lot, just looking at, you know, kind of what other people do. And that's kind of why I got into trading back in the day as well. But the main thing that I feel like a lot of traders don't do is they'll flex everything. They'll flex Lambos, cars, and everything like that. But where's like the live logins, the broker statements, you know, or even just live sessions, right? So for me personally, or just for us, like, we do we used to do live streams, right? And we still do live streams to this day. And also live logins every time I've ever had a big day, which is like big P&L day wise, I always will do like a broker live login or show you a broker statement. And I just think that's important for transparency, right? Because it's like at the end of the day, like everyone has seen those like people like move to Miami, get a house or whatever, like show that lifestyle. It's like, all right, cool, but like where did that money come from, right? That's the most important part. And so for me, I think it's, you know, showing the money, showing the money where it came from with the live logins and the broker statements, but then also showing the live recordings. Like I have the live sessions of me taking those trades, saying why I'm taking the trade, and explaining the thesis behind the trade as well.
And are you both predominantly on prop firms or personal capital?
Personal capital. So how we trade is we're on a regulated broker, right? A lot of Forex brokers, there's a lot of unregulations, right? Some people own prop firms, right? There's a lot of things that can go on, but when you're trading options, everything's under the NASDAQ, right? Everything's regulated. So we would trade with Interactive Brokers, very reputable firm.
Yes.
That's been around for a very long time.
No one can mess with the back end because for the newcomers in the space, they don't know, and I was late to understand this, but you could have a broker statement, you could have a live login, but they might own the broker, or they might have a white label, or they might know the guys. In an unregulated broker, that's easily doable, apparently. And even therefore, the MyFX book verifies it's a live account. But if you own the broker and you can just switch on the live account number, the MyFX book is going to show it. So the issue with the space is, even if you show a live login, it's questionable. Even if you show a MyFX book, it can be questionable. Even if you show everything, the only thing that can't be in question is a regulated broker or live sessions, like live calling the market. That's the approach I've also taken. Because then there's no shadow of a doubt, and people are always going to follow you and say, okay, until I see your bank account and everything, we're not going to believe you, but that's the best we can do. So I wanted to start off with that, just so, you know, people know it's worthwhile having this conversation. So now another thing that I found in my experience with having a lot of traders on, the better traders, let's say, they have a predefined plan that they can explain, and the traders that I found were not the best, just from the feeling I got, and I didn't actually upload those episodes, was they were all over the place in their head, where one day they're taking an Asia session trade, the other day they're trading London, then this EU, then it's CAD JPY, then it's swing trading and scalping, like it's all over the place, and because it fits the bill for everything. So they always have an answer and they can tap every audience, but that's not real life. And I think for a profitable trader, you need restriction and you need a predefined plan. So do you guys both trade very similarly, or?
We trade pretty similar.
Okay, then as a collective, how would you guys describe in a couple sentences your strategy, your approach to view the market?
Sure. So for me personally, right, like I trade options, so I'm an options trader. So I only trade from 9:30 to 11 o'clock every day. I don't trade after that, right? That's a defined rule I have. And I'm trading the break and retest. So what that basically means is on the 4 hour, I'll go. So I also do the top down analysis, right? So from the top down, I'll go on the daily, make my thesis for what I want to see on the markets happen. And then on the smaller time frames, so for example, the 1 minute, right? I will actually trade the break and retest based off of a key level that we have. The reason I do the break and retest is just because for me personally on options, it gives the most risk to reward, because if you're a breakout trader trading options, right? If that trade does go back down, right? Instantly your option contract is down 20%, 30%. That's just due to theta. Right, so you have to keep that in mind when you're also trading options, and you trade futures, right? Futures or Forex.
I trade Forex only.
Forex only, right? Yes. So you don't have to worry about those, those back end, all the Greeks. So for me personally, that's the best, right? Momentum trading, top down analysis, momentum trading, and then trading on the 1 minute time frame.
I'm getting a sense, because now you're looking for the day when the volatility or momentum kicks in, and the break is the signal of that, and then time of day is most likely to be a meaningful move, and that's why you've aligned it in such a way. What would you say is your execution criteria? So let's say you got a break and retest. What are we breaking and retesting? Is it anything that's consolidative or trend lines only, or?
It's going to be the higher time frame, right? So you have to break out of the higher time frame, whatever on the higher time frame. Let's say we're consolidating, right? I'm not going to trade the consolidation. I never trade the consolidation. I only trade trend. So when we actually break out of that on the higher time frame, because that holds more emphasis on the chart, when we retest on the lower time frame, on like the 1 minute time frame, that's going to be the best entry, because if the higher time frame wants to keep continuing, the lower time frame just gives you the best risk to actually enter in off of to capitalize on that bigger move.
Okay, I've got two things I want to touch on what you guys have said. Number one is the 1 minute time frame. I think it's very misunderstood, and a lot of people just automatically write it off, and other people swear by it. And myself, my belief is that you can watch a movie in 360p and you can watch a movie in 4K. It's the same movie, but the detail is in the 4K. And that's what I viewed a M1 chart as, is the higher time frame is like your training wheels when you're learning to ride a bike. It's a nice guide. It's definitely where we should look and begin. But once you are competent with your lower time frame, you can take off your training wheels and rely on your lower time frame. It just requires a bit more knowledge and experience to move with the faster price action. So I'm a big proponent, and I need it. And if I don't have the M1 or the lower time frame, I feel like I'm going in blind. And those key details of when a higher time frame zone is about to invalidate. It might be a supply zone with trend. I can see it start to invalidate on M1. Those details are important. Those runs of liquidity I see on M1. So I'm a big believer. To those people that are skeptical of M1, what would you say?
I would say that the 1 minute time frame gives you precision. That's what I personally believe in, right? Like you said, it's in 4K. So for example, with options, like if I trade on the, let's say the 10 minute time frame even, right? Which is just a little bit more above the 1 minute, but it's not the 1 hour still. The risk to reward for me on that trade, right, it would have to be lower, right? Because I trade, for me personally, I'm looking for at least a 2R multiple on my trades. So the 1 minute time frame will allow me to get that multiple, because my market structure break will be on the 1 minute time frame just because of that precision. But then my profit target will be on the higher time frame.
So why does it only lead to a 1 to 2? Because if you're entering on, let's say, an M1 break of structure, M1 range, your stop loss can be fairly tight, and then a 4 hour move that is disproportional.
Right.
Do you cap it early then?
But yeah, exactly. So I take trailers, or I take partials along the way. So high of day, always I'm out of I'm at least 10 to 20%.
I like that. Yeah.
Right, and then I'm taking partials along the way on those higher time frame levels. Right, and the reason that is because you need to lock in. I actually heard Umar say this back in the day, and it's locking in cash flow as the trade continues into your direction. And at the time I didn't really understand. I'm like, why would you take like your partials off when your profit target's all the way up there? It's messing up your risk to reward. But for me, right, like the risk to reward could be like 4, but I know on that trade I'm going to get like a 2R if I just lock in those partials. So still I'm getting that 2R, right? but it's just I'm locking on that capital. And the main reason I do that personally is because sometimes, especially if you're entering on the 1 minute time frame, it'll go to high of day or whatever it'll go to with that momentum, but then it'll reverse from there.
Yes.
Right. Yes. And so therefore, if it's reversing from there, going back to your stop loss, you could have been up on that specific option contract, maybe 20-30% on the option contract of trading like a weekly, right? But you never actually locked in any profits, right? So when I actually looked at the data and back tested, I'm like, wait, why am I not taking partials here? And then that way, if it does go back to my stop loss, it's fine, but I could be wrong and still make money.
So out of the dozens and dozens of prop firms that exist in the whole space, who can we really trust? Whether they use slippage, whether they use types of drawdown, unrealistic trading conditions, every single prop firm has hidden tricks. So after thorough research and speaking to a lot of traders, Alpha Capital is definitely the best prop firm in the space. So apart from their no commissions, low spread, no slippage, great reputation, never denying a payout, because you are a Titans of Tomorrow viewer, you get a special discount on every evaluation just using the link or using the code TOT for Titans of Tomorrow. First of all, I like this a lot, and I had a similar process myself where taking part. So my opinion on taking partials is a very important topic, because just like we have entry criteria, people then just get flimsy with the exit criteria. They're just like, okay, based on what I feel or based on time, I want to end it. Friday's coming, let me end it. Or what I was usually doing was subjectivity. So sometimes it'd be like, okay, it's pro trend, so let me go for the next lower low. Okay, so I'm with the trend in that next lower low on 4 hour. But then along the way, you have a 5 minute lower low, and then you have 15 minute, then you have 4 hour, maybe even the daily. So there's multiple levels that we could take a partial and it's valid. And then you add in the liquidity pools. Oh, there's Asia low, and then there's the swing low, and then you have all these levels. And then you could add in trend lines, basically to say there's always a reason to enter and exit. There always is. So when I was doing it based on how I felt, there was an element of discretion and randomness, and usually a sprinkle of emotion based on how I was feeling, the numbers up, whatever. And what I found was I was optimizing for the anomaly, which is the home run. I was optimizing my system for the daily swing, the daily lower low. And then when my journey was, I looked into it, I was like, how often does that happen? And a lot of times I'll be like, trade would go into profit, as you just said, and reverse on me and it hit break even. And I'll think, well, it's break even. At least I didn't lose money. And when you count it up in your head, you're like, well, that's a lot of money left on the table at the end of the month of those break evens that were up a little bit. So when I just looked back at I did 1,000 trades sample size, and I was like, okay, how many trades go to my final TP? How many trades go to my TP and beyond? How many trades go to just 5 pips, 10 pips in profit and then break me even or stop loss? And then when I mapped it out, it was like a bell curve where the home runs and those beyond my target were there, but they were not the main one. Those ones that were 3-5 pips in profit were there, but they were not the main one. Majority was somewhere in the middle. So I thought to myself, instead of taking partials based on what I see and feel and concepts, let me fix it for data. And it seems like you're doing an approach of that. And is it fixed at certain levels of risk reward or pip count, or is it fixed on criteria, static criteria like high of previous day and stuff? What are those exit points for you?
Yeah. It's usually always based off criteria, right? Because when you're scaling, when you're trading options, it's a lot more discretion, right? Because you have to understand that you have to not only worry about the underlying price of the actual stock, but you have to actually have to look at the options contract as well. So whenever you're looking to scale, right, when you always want to take partials and options, right, you want to take some off at the first profit target. But the thing that's so good about options, which is different than, let's say, Forex or futures, is that those option contracts, the more they are in the money, right, the more they'll pay you, right?
Okay,
so
good.
as like, right, let's say you take off 25% at the first profit target, 25% at the second profit target, and you have a couple of trailers running, right? Let's say you have 10% of your position running. That 10%, let me break this down into a more explainable thing, right? So you take off 80, let's say you take off 80% of your position at profit target 1, right?
Okay, that would be a intra-session target.
Yeah, that would be like probably intraday liquidity, right? You're maybe looking at the actual intraday high, right? But then you leave that 10% for an external level, or let's say previous day high or a higher time frame target. That 10% of the options contract, right, can pay you more than the actual 80% that you took off at high day.
Oh, how does that work? Why does that happen?
That's just because of the option contract itself, right? So for example, for you, right, you have a very fixed, you know exactly how much you're going to lose when you enter the trade. You know exactly how much you're going to make dollar wise.
Based on the targets, yeah.
Based off the target. But with options, because we have so much Greeks involved in the background, right? So we have delta, we have theta, right?
You're going to have to familiarize me because I'm not aware of these things. It's not my space.
Okay.
So what are these terms?
Right. So just in the most basic sense of what the audience kind of needs to know for this is when you're looking at theta, that's how fast the contract value is depreciating as it's going to the expiration. Because let's say it's going to expire on Friday, the option contract, let's say it's $20, it needs to go to zero, right? And so theta is how fast that's happening. Okay. And then the delta is how fast the option contract is moving up compared to how much the underlying is moving. So for the dollar and underlying is moving, the delta might be like 20, so it's moving 20 cents per the dollar move.
Okay, and these are fixed variables, as in you know them, or you have to assess them?
They're constantly moving.
Yeah, you know them, but they're constantly moving as the actual option is.
So you have price and then these two other things.
Not two. There's multiple different Greeks that you have to worry about, but those are the two main ones you have to worry about.
That sounds complicated.
Oh yeah, options.
So you can't trade it in the sense of just price action charts.
Exactly, you have to work. So that's exactly how he was saying it, right?
Okay.
You can take.
I get it. Okay.
You can take that's exactly why I take high of day, right? Because I lock that money in, but then I know for a fact that sometimes my 10-15% will make more on that trade in dollar wise than the whole trade made the other 60-70% that I took out.
So in that case, because the upside is variable, dependent on time, I guess, the longer you hold it, the more upside you could have. Does that mean you modify
quickly? That isn't exactly, because the longer you hold it, you could technically make more, but then it's also
the decay.
The decay is killing the contract as well.
So
right?
there is a sweet point you got to kind of figure out.
Exactly.
So have you found an optimal exit time? Is it like usually holding a trade for X amount of minutes or hours is optimal?
Yeah, when you're trading, right, how we trade is momentum and higher time frames, right? If we have our A+ setup criteria, like the best time is 1 hour after, right? Because a lot of the times you'll see when you're trading the tech stocks, like we're trading Nvidia, Tesla, right? If we have those higher time frame breaks, right, a lot of the times the best time to scale is 1 hour, and then the next best time is scaling at end of day, right? Because a lot of these times on the higher time frame breaks on the daily chart, we'll have continuation on the higher time frames, and then potentially, right, we'll hold that 10%, let's say overnight, and that 10% will make up more than what we actually scaled.
And you're entering on a fixed New York window.
New York
open.
Yeah, New York open. So our entries will be 9:30 to 11, and then if we do want to hold it, right, we'll hold it to either end of day or potentially swing it overnight.
I like it. So because there is this disproportionate, it's not a linear growth. Your profit doesn't grow linearly. There's other things that are influencing it. Does that mean it makes sense, or do you guys modify risk?
So I've seen your approach to this where you say you risk 1%, I believe, right?
I'm within 0.25 to 1% based on the setup type, but it's standardized and my setup criteria is modeled, so I know what I should risk on that setup. Whereas I've also had credible guests that tell me, and their reasoning of like, you got to double down on A+ setups and scale risk. Other people just with prop firms, they go more aggressive on the challenges, and there's a spectrum of opinions, which is why, and I think everyone has the right to have that opinion. I don't think it's a right or wrong way to do it. But with this, there's another element into the mix. You have more things to consider than in Forex.
Yeah. So for me, I actually saw the video of you and Umar, like you guys had that risk management talk, and I'm gonna have to go more with Umar's side on that one. And the reason that is because with options and the strategy that I trade, right, I need to have a trending stock on the higher time frame, right? And like I explained, right, I'm looking at the 4-hour daily to make my thesis. So I need to have a trending stock. So that could be Nvidia, Tesla. Recently, it's been Nvidia, for example, right? And so if I have a trending stock on the higher time frame, then if I go down to the lower time frame, then I can actually have my risk on during that time. I should have more size in that trade. For example, yesterday I did a live broker login for I think $22,000 yesterday. The reason I was able to do that was because Nvidia had a very clear downside move yesterday, and therefore I sized up yesterday. I had about 60 contracts. Where usually 60 contracts yesterday was like $100,000 position, right?
Of risk.
No, $100,000 position, total position. The risk was was like $10,000, but the position size was 100,000 because it was a 2-hour multiple.
Got it.
Right.
Okay.
But usually, for example, like on Tesla, or if I'm trading any other stock, I'll have like a $15,000, $20,000 position size.
Do you have leverage in options?
What do you mean?
Like if I put 100,000 in trading, the buying power can be 1 to 100. So I could have a lot more buying power. I could buy more of contracts. But in options, they're 1 to 1.
Well, options is already leverage in itself. Right? It's already times when you buy one options contracts, it's technically you're buying 100 shares. So it's already options in itself. When you buy the contracts, it's already highly leveraged.
Okay, so it's not like a crypto thing where if it goes to zero, you lost everything.
You technically, if the option contract goes to zero, you'll lose everything.
Yes.
Okay. So
yes.
Why have you guys chosen options?
The thing is I feel like now a lot of traders come in, they're on the ICT, SMC. That's like the new wave I'm seeing. Because I started my own social media probably like 2 years ago. But for like, I've been on social media, obviously just being younger, I've been on social media the whole time. I've been watching a lot of traders and stuff like that. And so I think the ICT SMC thing just came in like the last 2 years has really been like boomed, right? But before then, I started off on Twitter, and on Twitter, I started off penny stocks. Right, so if you know what penny stocks are, right?
Wolf of Wall Street.
Wolf of Wall Street, right?
So I don't have too much knowledge, but that's all I know.
So those are probably the worst things to trade, right? So that's what I started on, and so I was trading that, and it was like, okay, like I'm trading this, like the reward is definitely there, but the risk on penny stocks is like these things will, if they halt, right? If the stock halts on you, this thing will open up down 60-70%. And you lost that money in like 1 to 5 minutes, right, on penny stocks. And so I was like, that's not like, I can't have a good risk management strategy when this thing will be down 60% in 1 minute, right? But with options, you're trading large caps at the end of the day. You're trading Tesla, you're trading Apple, you're trading the biggest companies in the world. So if you're trading those with option contracts, it's a little bit more safer than trading those penny stocks, right? Because penny stocks, they'll halt down. These things won't halt down on you unless they have a catalyst, right?
And they're more manipulated. The penny stocks.
Penny stocks, 100%.
A big whale can really influence it.
100%.
How manipulated, because in Forex, no one can really manipulate it properly because it's such a liquid asset and there's so many participants. The reason I like it is because not everyone involved in Forex is there to make profit. If there's a big oil trade going on and it's happening in dollars, that's going to be a physical movement in price because someone's buying that. But in options, it's a manufactured asset class, right? And therefore, everyone trading it is there to make money. So it's a very player versus player orientated.
Yeah.
Okay, so what was your decision-making process to choose that over Forex, or something else? It seems like there's more challenges to it.
The main thing is a lot of people, they like Forex and futures now is because there's prop firms, right? The main thing is capital, right? It's usually a capital issue, and with the prop firms, right, it's like where you can have $100,000 account, $50K account for what, $50? Like that's what the appeal is, right?
You don't have that.
No, because when you're trading,
we don't have prop firms in options. You don't have.
Okay, so I'm not in your guys' space, so I'm maybe coming across more of a novice, but maybe a lot of traders too in the audience. But I'm seeing like it's harder. It seems harder. There's more variables, and it's more confusing, and it's a capital issue, and you can also lose all your money that you put in. Like a lot more hurdles that are not necessarily need to be there, but obviously you guys have chosen it because there's other benefits. What are those benefits?
So the thing with options is, you for example, like back in the day when like the market right after COVID, right? Like did you see like those Wall Street bets type of like, right? You saw that, right? Those, they were all trading options, right? They were all trading options. Every single trade that you saw that was a big trade there was an options trade. So the reward, if you can, if you have a really good trade, for example, like if Nvidia drops that day, let's say 10-15% on the underlying, these contracts will go up 1,000%, 2,000% within a day, right?
So why do you cap it at 1 to 2?
That's just because I don't cap it at 1 to 2. I'll let
your first position. So
the first partial will be around there, or the first partial will be at high of day, but then I don't cap it. That's the thing. Like I can let it run to my higher time frame targets, and then once I'm at those higher time frame targets, as mechanical as you want to make trading, the only discretion that my strategy I feel like has is just if I'm looking at the markets and Nvidia has, let's say, a news catalyst, and I know, well, it's once again I wouldn't know, but there's more of a likely chance that this thing's going to keep dropping. I will stay in only like 2 to 3 option contracts. Very, very small, right? And those contracts, if I swing them overnight, can make 2,000, 3,000%.
Oh, that's crazy.
Exactly, right? So that's the main reason we chose options is because if you can manage your risk properly, and options is a class or asset class that you really need to manage that risk. If you can manage your risk properly in options, you can probably make the most amount of money. But the thing with options, once at the end of the day, is you don't need a big account. Like, you know how for your guys' thing, like prop firms, especially like stuff like that, you need like $1 million account, right? Like you see a lot of people nowadays saying they're a seven-figure funded trader. In options, like for me, for example, I only trade like $100,000 account. You don't need more than that, or like real capital, but you don't need more than that.
Is there a liquidity bottleneck as you scale? For example, in Forex, you very rarely have an issue of liquidity unless you're at like $200 million.
Yeah, exactly.
But like if you have $1 million account, a $2 million account, with your USD, which is moving billions of dollars of circulating money, someone's little $1 million is not going to be that consequential. But in your space, it's player versus player. It's not a underlying asset that is needed in the sense of my euros are still going to be needed by someone. I can always sell it into the market. Obviously, brokers and prop firms are booking usually, so it's so demo or simulated. With you guys, is there a case of if you scale to like say $5 million, it's too much money.
Not putting,
it doesn't work.
It's not possible.
And there's a case of like if I want to exit a position, someone has to buy off me. Is that
yeah,
direct transaction?
Someone has to buy it off. The main when you look at the main purpose of options, right? For when you look at the institutions, why do we even have options? It's to hedge your position. That's the main thing. You don't need as much option let's say you're going long on, SPY, for example, the institution is. You just need probably 10% of that long position in puts, and it will hedge your position correctly.
Okay.
Right? That's the main purpose of the option contract. That's the reason it's even a financial instrument.
And so the reason you guys have selected it over other assets to trade is because of the volatility and potential upside you can make in terms of percentage.
Yeah.
Okay.
100%.
And do you feel like obviously when people hear big percentage potential, like you hear in crypto, it is also pegged to more uncertainty, scam, unreliable, gambling, these kind of words pop to mind. How do you react to those words? Do you feel like there's a lot of uncertainty, or can it be as mechanical and as certain as any strategy in another market could be?
I think it can be as mechanical and robotic as you make it. Now, like I said, the one thing I did say earlier was just, for example, with that NVIDIA thing, right? I'll take 2 to 3 contracts. That's discretion. That's the only, right? Those very small position size, that's the discretion that I personally use. That just comes from experience, that when I believe that I should take those partials or not. But other than that, the whole strategy from A to Z is scripted out. It's completely robotic, completely mechanical, right? It's like my entries, I won't take a trade unless I see an A+ setup on the higher time frame. Then I'll go to the 1 minute time frame, and unless I see strong price action at that key level, I won't take that trade, right? No matter how good even if the higher time frame breaks out, it will be the perfect trade, right? But if I don't see my entry on the 1 minute time frame, I won't take that trade.
I like you guys a lot. So one of my favorite mantras is I live my life through mantras, where I always have certain sayings in my head that I always say to myself, and they're like my North Star. They guide me. And in trading, I have a bunch, and one that I'll share with you guys that I've said is a restricted trader is a profitable trader. And in the online space where we have so much content, we have so many concepts, we have so much information, that's never an issue. We'll always have some indicator, some trend line, some this, some that, some SMC. Like, there's always a reason to enter. That's never going to be the issue. The issue is the difference between profitable and not profitable is not information, it's not strategy, it's how you apply it and how you refine it and what are your restrictions. So I've just found, like, if I've got a good trade and it ticks 9 of my 10 boxes, I can't take it. If it's my non-negotiable, I can't take it. And some people are like, but it's close enough, it's good enough, you got these other reasons. But that's the restriction that defines non-profitable to profitable. And it seems like you guys are very restricted and have a well-defined plan. And that's how I don't know enough to say, but like, that's how I can determine if someone's legit or not, just by how restricted they keep themselves. Because we've all tried being loose with criteria, and one day entering on this concept, another day on that, but the restriction is what differentiates. So let's getting into that. Another thing that I like to define for myself, the analogy I give is spinning plates. I don't know if you've heard me say it before, but the idea being that as traders, we initially, as newcomers, we try to control the non-controllables. And we can't control the market. Those are external, so certain things we have to accept. And there are certain things in our control, and there are controllables, and we can definitely control them. And that's the only place we can maneuver. So the way I like to look at it is, certain people figure that out, and then they just spin one plate. And the idea is that in the circus, you spin all the plates, you got to balance them. If you spin one, the others crash. So you got to balance everything. What I find is certain people spin that plate of risk reward too much, or certain people spin the win rate plate too much. I need to have an 80% win rate. I need to have a crazy risk reward, and they focus on too much on one when they realize you got to balance everything. And for me, I found that balancing act, and I've done it down to numbers. So I know my desirable win rate, I know my desirable risk reward, and it seems like you guys are doing similar. I know my time of day to trade, my trade duration, my trade frequency, asset class selection. These are all my controllables, and these are my plates I'm spinning. And of course, I could focus on the win rate one and get an 80% win rate. But what's going to happen? If I want to have a high win rate, I've got to be very selective. That opportunity doesn't come so often. So my trade frequency gets really low. That plate might crash. So I've got to spin the trade frequency a bit more. So then if I want to trade a little bit more often, well, my win rate naturally has to come down, and you balance them. So getting into that analogy, if you guys could explain to me, what are your numbers? What do you aim for in terms of your average trade? If it reaches your destination that you wanted, what is the average risk reward? What is the average win rate you want to have? Trade frequency, trade duration, all of your controllables that come to mind. Where do you like to keep them within your strategy?
Sure. So when I started, especially when I started showing my trades live, right, I knew my win rate, I knew my risk to reward rate, and my win rate is about 57%, right, with my risk to reward being about a 2R multiple. when you're live streaming,
is that 2R in this? Because you're taking partials along the way. So is it
2R is going to be the whole trade? No, the 2R is going to be the whole trade. On average, the whole trade, the way I'm going to take that, right, is going to be on average over 1,000 trades. It'll be 2R. But some trades will be like a 3R, some trades will be like a 4R. But then overall, some trades might even be like a 1.5. But overall, I've noticed with my data, it's about 2R. Okay. It's about 2R. But the problem is when you have a 57% win rate and you're live streaming, people don't like that because it's like, why don't you have 100%? You said you were a profitable trader. Well, that's not how trading works, right? So the way I like to explain how the win rate especially is, let's say you have dice, right? And you have 1 out of 6, right? For dice, let's say you want to roll the number 3. Out of 10 rolls, out of 60 rolls, how many times should you roll the number 3? 1 out of 6, right? So 10 times out of 60 rolls, right? But the problem is you're not going to do that. There's no way that you're going to get that 10 off on that 60 specifically. It's not it's not guaranteed. It's not guaranteed. You need to have 1,000 sample size. So the more the sample size goes up, the more the probability of the trade that you have goes up, right? So the thing with me is like sometimes I'll lose 6 trades in a row. Okay, but then sometimes I'll win 6 trades in a row, right? But I know over a long period of time that's going to be my win rate. My win rate is going to be around that 50 to 60% win rate.
So I'm not that guy that is going to sell out and throw promotions at you, throw this link, that link. You've never seen it from me. But TradeZeller is a little bit different. This is a journaling software that I've been using myself for about a year now, and you've seen it on my YouTube videos many times, going back months and months. And because I'm friends with the founder, Umar, he's actually given me an exclusive offer to pass on a discount to you guys because I told him that it's a valuable gift I want to give to my audience. As a trader, it's very simple. You have to find an edge and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data. And TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your back testing tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting it on an Excel spreadsheet or taking screenshots on your iPhone, you wouldn't be able to pull out the data that you need. The correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it, and probably you'll be using it for years to come.
So on that topic, I like this because a lot of people, they get stuck on small sample size and they're like, okay, I've taken 4 losses in a row. I need to switch it up. I need a new strategy. I need a new plan. Something's not working. When they maybe just reflect and say, that was part of the plan. That's the factored in losses we have. And as you just said, let's say I'm supposed to take 10 losses on a 20 trade sample size. Those 10 losses are not going to be conveniently win, loss, win, loss. It might be 10 losses up front and then 10 wins. It could be. It's not likely, but it could be. And people don't let the probabilities play out, where we just know if it's a valid loss and it's part of the plan and it might be just a losing period, that's okay. And we've got to stick to it, and people start to switch it up. I just wanted to chime in there. And then the win rates is, I think you guys have gathered it's not a how good you are as a trader. It's not a performance thing. It's like the better trader is not the better win rate. It's a selective thing. It's not a performance thing. It's where you keep it. Yeah.
One thing I would just say about the win rate as well is how you said a better win rate doesn't mean you're a better trader. Is I feel like on social media a lot of traders are going to flex the win rate. I've been green for 3 weeks in a row. I've been, I haven't taken a losing trade in 3 weeks or 4 weeks. But it's like at the end of the day, the people that actually know how to trade, it's like, okay, sure, but what's your risk reward on those trades?
It's that plate thing. It's like there's always a trade-off.
Exactly.
So if I have a really high win rate, then my trade frequency is low. So if I want to bring up my trade frequency, I've got to trade a lot of things. So now I need to be trading 20 currency pairs. Okay, that's a problem maybe. And there's always that equilibrium and sweet spot. What I'm noticing though is because your win rate is around just above 50 and your risk reward is 1 to 2, you have a very fragile profit.
Exactly.
Like you could be having a quite negative period for a while and you just got to let your probability play out. Why have you not decided to shift your risk reward slightly up to give you the breathing room for a 57% win rate?
Yeah, so because like I said, it's on average, it's going to be a 2R multiple, right? But then, like I said, when I talked about the actual position sizing as well, right? So position sizing plays a big role, especially when you're trading option contracts. So when we're in trending markets, right, I'll increase my position size by maybe 2 to 3R, or 2 to 3X, sorry, not R, 2 to 3X. Okay. And so what that will do is, though my risk to reward is still the same, the dollar value will increase for those 2 months. But then afterwards, let's say after those 2 months, we go back. For example, last been a month on QQQ?
Yeah, so last month on QQQ, right, in March, it was strictly just consolidating, right? After we hit all-time highs, right? The period to trade the options was the move towards all-time highs, right? The past 6 months of 2023 and a couple of months in January and February, right? Those were the hot periods for trading options, right? Because you had clear targets, right? That all-time highs level. There's a lot of liquidity resting above most names, right? For the tech names wise, right? AMD, NVIDIA, right? The whole play was to trade towards that all-time highs. So once we had that all-time highs hit on the QQQs, what happens, right? We went from expanding towards that all-time highs. The next logical thing is we're going to start consolidating. So, right, in that consolidation period, that's when a lot of people start getting the markets because they're like, oh, QQQ's at all-time highs. The market's starting to heat up. They try and come in, and then it's consolidating. And then when you're day trading wise, right, when you're trying to day trade and the higher time frames are consolidating, you're going to lose a lot of money, right? So that's where a lot of people, you have to understand market conditions as well, right? Back in February, I had my second biggest month in trading, which was I made $47,000, and every single trade I was taking live. And out of the 2 trades, right, 2 trades out of all the trades that I took that month, right, 2 trades made up for half of my P&L. So I took one trade on,
even though the risk reward was fixed, it was the dollar amount.
Yeah, exactly.
The risk
right?
in.
The risk in, right? So NVIDIA, I took one trade on NVIDIA, one trade on AMD. It was on back-to-back weeks. Those 2 days, I made $26,000 out of $47,000 in total. And that 2 days made up for 50% of my P&L because those were those A+ setups. And it only takes 1 to 2 good A+ setups to make your whole month and potentially to make your whole quarter.
So with that being said, why would you not just only take your A+ setups, knowing that counts for the most, and then you maybe disqualify a lot of the losses along the way for the other types of setups you have?
That happens, right? You mainly want to be sticking to A+ setups, but obviously, as Rafe said, when sometimes you have a room, and Tony. Sometimes when you have a room, right, a lot of people, right, what do they like? They like day trading, right? They have to come into the game. They want to take trades every single day, right? So sometimes when you put on trades, they're not always going to be A+ setups because the A+ setups come once a week, maybe once every 2 weeks, right? Those A+ setups, right? But a lot of people every single day, they're expecting A+ setups every single day. You're not going to get A+ setups when the markets are either consolidating or the higher time frame's not there, right? So
do you trade many? Do you trade, not currency, what's the word? Stocks? How many stocks do you allow yourself to trade?
So this is a rule I changed recently just based off back testing. I used to primarily, I'd say 70 to 80% of my trades, and it's similar to what he just said, right, was Tesla. Why? Because Tesla was on the higher time frame. It's been uptrending for a very long time. So why would I not trade Tesla, right? For the past, 2-3 years, Tesla's just been uptrending. That was my main primary stock. Off the Tesla stock alone on options, I probably made $1 million so far, off Tesla. Right? Why? Because it's been uptrending, the easiest stock to trade. But now Tesla's not uptrending. Tesla's been in consolidation, right? And therefore now I've changed the rule where I'm only looking for those higher time frame stocks. So usually per day we probably have 4 to 5 stocks on watch, but it's the exact same ones, right? So NVIDIA, Tesla, Apple, Meta, SPY, QQQ. 5 to 6.
On those 5, how often will you get a good setup? In the space of a week, how often can you execute on a trade?
So last week, for example, I took 3 trades.
Is that normal, or is that
on average? I only take 1 to 2. Now in the option space, not a lot of people can say that they take 1 to 2 quality trades. Most people will take a lot, but for me personally, I take 1 to 2 per day. But recently, it's been 1 trade. So last week I did 3 trades. The week before that, I did 4 trades. So it's been about 1 to maybe not even a trade a day.
And is it the same that people don't? In your space, I'm not a fan of the lower time frame, the M1, or is it quite accepted that people do it?
I think on the thing with options is, I don't know. I feel like
it's based off momentum, right? When the higher time frames are trending, right, that 1 minute time frame is going to be your guide, right? When you're consolidating, right, let's say the higher time frames, they're not really doing too much, right? You really want to stick on the 5 minute, right? Because there's less volatility, there's less liquidity in the markets. So what's usually going to develop is on the higher time frame, which is the 5 minute, right? But when the markets are trending, right, those 1 minute time frames, moves happen right off the gates, right? When you're looking at some of the best setups come from those opening drive plays, right, where you have a trending day the previous day, and then you come into the pre-market, right, it's consolidating, right? We're looking for that quick push towards the downside, and those happen right off the gates, right? Those usually happen on the 1 minute time frame.
Okay.
I was just going to add on to that. What I was going to say was, in general, in trading in general, not even in options, but in trading in general, nobody likes a lower time frame, especially newer traders, right? They're always like on the lower time frame. They're like, oh, it's a little bit too risky. Like it moves too fast, right? So even in options, like we're trading stocks, right? At the same time, we're trading this underlying stock as well. So they don't like the lower time frame, most people, right? But if you can learn the lower time frame and then you can actually like go sit down, back test, and then also forward test while you're at it, right? Then you'll actually learn that the precision in the 1 minute time frame is the best precision you can have. Under the 1 minute, I'm not a big fan of like the, under that it's like 30. People are trading on the 30-second. That's too much. That's too much. But the 1 minute, I feel like is the last one, like the lowest time frame you should be on, and it's the most precision you can have. Definitely.
So when it comes to the 1 minute actual execution, is it just like a break retest or break of structure and coming back to the order block, or what is actual entry and stop loss defined by?
Sure. So it's going to be, so let's say on the higher time frame level, we have a key level at like 100. Okay. On that 100, we break it on the higher time frame and we make a pivot high for the day. Okay. So once we actually retest on that key level, there's usually going to be something else, like you said, like an order block or a fair value gap. We personally like those concepts. Like we don't really use that in trading options.
Does SMC or ICT bleed over into options?
They do like order blocks, bit, yeah. Right? Fair value gaps, not so much, but order blocks, they're never
very little though compared to your side of the industry. Very little SMC or ICT usually. This is mostly price action. But yeah, when it comes back to that key level, right? Technically, for most likely, like you guys will call it an order block, right? So it'll come back into that order block. You want to see buyers stepping in there. So for me personally, like the price action candles, like I need to see that the price action there, right? Buyers are stepping in, and I'm looking at those candlesticks, right? Like a lot of people will look at time and sales, they'll look at level 2 data, but for me, it's just too much noise. A lot of people will also nowadays, I've seen people add the order flow. Right, people are adding order flow.
Can you see real orders in the market?
Yeah, you can see the order flow, right? But for me, like personally, like I just like to look at the charts because I've tried all of that. Like when I was first starting out, I tried every single variable. Let me look at time and sales. Let me look at level 2. Let me add order flow into my strategy because
why is order flow not a big one? Because if I had that in Forex, I know it'd be super powerful for me, but we just don't. So then I have to see the footprints and the signs of it in price action to assess what the liquidity and orders are. But you have it. Do you use it a lot?
So I try to add it, but for me, it's too much noise because when you're entering on the 1 minute time frame, if you're also looking at making sure that the order flow is coming in, I'll look at the order flow on the higher time frame, right? Like look at the order. By what I mean by that
validate the zone
exactly in that zone. Like are people buying, for example, Tesla? Are buyers actually stepping in on the higher time frames and putting in big orders? Yes, that means the higher time frame will go up if the actual higher time frame chart is good as well, right?
Can you see resting pending orders or stop losses? Also,
no, you can
if
just
you have level 2.
If you have level 2, but that's not order. That's not the order flow though. That's level 2. Yeah.
I would have said that would have been very powerful if you had that.
That's level 2.
Okay, so this is bringing to the next point I have, which we maybe don't see eye to eye on, is that your strategy is pending around trend on high time frame. I like it. High time frame zones, I like it. But then it's a consolidation break, retest, lower time frame rejection, and then trade with that trend. If I'm to summarize very briefly. What I've also found is when you have a range of a type, whether that's a trend line, whether that's a support resistance, or anything that invites a lot of orders and stop losses, it could just be a structure point because we know a lot of people are going to put their stop loss around structure. When I see these orders, a lot of people will say, okay, when it's broken that range, then it's a new trend. We've seen that push out, we've seen that injection of volume. But there's also the argument of it could be a liquidity grab. We go up, we grab those stop losses to fuel the move in the opposite direction. How do you differentiate between a break, retest, new trend going up versus push out, so liquidity grab, and go lower because you are breaking out of the range where the liquidity is? How do you decipher those two or differentiate those two?
Yeah, so basically what we're always trading is like momentum, right, on the higher time frames. So we'll look for that, right, that push down, that consolidation. And then once it breaks, right, there could potentially be a liquidity grab where it could potentially reverse, right? Or we can capture that momentum right off the gates and then have a trend in your actual direction, right? After price consolidates, after a big push down consolidates, it's either going to have a retracement or it's going to expand in the actual direction that you originally thought it was going to go, right? And that's based off our set criteria, right? Understanding relative strength and weakness as well, right? That plays a big factor into our trading, right? Understanding right? Because when you trade the tech stocks, right, we also have the NASDAQ and the QQQ pulled up right beside to gauge that relative strength. Because Tesla, right, Apple, Nvidia, all these
they correlate.
Yeah, they correlate,
okay,
right?
okay.
So that's where we have our edge that also plays in, right? So if Tesla, right, has a big push down and it's staying heavy, right? So it breaks out and then it stays heavy, and then the Qs, right, they have a bounce, right? So let's say the Qs, right, end up sweeping liquidity and then start pushing towards the upside. But then the Tesla stays heavy, right? So we understand if we understand that Qs are most likely going to go back, right, sweep liquidity, it's going to take out maybe previous day high liquidity now. And if Tesla stays heavy, right, underneath that liquidity level, right, we can expect that Tesla's going to have continuation in the way of a trend.
I like it. And do you have the same beliefs in your strategy of, I mean to say, like, if I'm seeing consolidation, I'm seeing that the buyers and sellers in terms of a tug of war, that's how I visualize it, is they're both as strong as each other. When it's market is bullish, we know that the buyers are stronger. They're winning that battle. And consolidation is because they don't know who's in control, and therefore they need to add a player to win the tug of war. And the way I see that add of player is you need price to dip lower to take some sellers out, to take their stop losses, so that the buyers have more relative strength, and therefore liquidity for me is a big one. Yeah. If I'm to boil it down to one of my key things, it would be session volatility, so the time of day where it's the most meaningful moves will happen, run of liquidity, and then time-based manipulation, and probably just lower time frame confirmations. Those are the things I'm most heavily based on, and those are my non-negotiable criteria. Is run of liquidity something very important for you? Or is your strategy more just like seeing a breakout, seeing momentum, and then checking your other things to see if there's relative strength to support that move, and therefore not so much liquidity?
So for us, the main thing for us, right, like he just mentioned, is when we're playing that momentum on Tesla, for example, right, liquidity is important, but for us, the main thing that's important is the correlation between NASDAQ and Tesla, right? Because NASDAQ, what is NASDAQ made up of? It's made up of all the tech names, right? It's made up of Tesla, Apple, and you need to understand the percentage it's made up of. For example, Apple holds the most weight in NASDAQ, in QQQ, right? So because it holds that, Apple is going to replicate QQQ, right? And QQQ is going to replicate Apple, vice versa. Now, if Apple is showing weakness to me, right? If Apple is showing weakness to me and and QQQ is not showing weakness, right? QQQ is just consolidating, right?
Yes, yeah.
So therefore, you understand based off the edge and just the experience you have in the markets, like this is going to run to the downside, right? And the probability of it running to the downside is much more increased because if QQQ also drops, Apple will drop much further than QQQ, and therefore we play the correlation more than the run on liquidity.
I do something similar. So when I'm trading, I trade EU and GU, Euro dollar and GBP dollar only, and you'll notice that the dollar is the common pair, and therefore a lot of the time the price that is affected through dollar will map into both, and therefore EU and GU will move very similarly. And then as one of my criteria, because it's hard sometimes to know when you don't have the real orders, what is a run of liquidity versus a real move, because they will overlap. For price to go up, it might be break, retest up, and price to a run of liquidity is up, down. But you have that point in the middle where it's both there. So you have to have criteria to differentiate the two, and one of them is looking at the other thing, which is exactly what you're doing, to see does it support or is it a fake out, and if they're a mirror, is there a divergence or not, which I like. The other thing I wanted to tap into, what is like normal expected gains? What is a reasonable gain once you've got a good edge? More so because in trading, it's quite misunderstood, and people make their gains based on what they want to make in terms of dollars. So they're like, okay, if I started with $1,000 account, I'm better off, instead of working at McDonald's, it's only worth my time to make thousands of dollars. Otherwise, I might as well go get a job, because if I'm making 2%, 5% on a $1,000 account, it's not worth anyone's time. So then it becomes either I chase really large percentage gains or get more capital, and then prop firms becomes the great thing. And usually what people will start to expect is like 10% a month is the norm, which is quite high actually, because that became the prop firm barrier. To pass an evaluation, you needed 10%. So that problem was solved of capital, but then it became a thing of you got to make too much returns. So what I think is a more reasonable gain is between obviously losing months, but normal is like between 1 to 5, 1 to 10%. That's the normal range, but I'm gathering a sense of in dollar amounts you can make a lot more because of the way you can manipulate your risk and the percentage gains you can have. So can you grow a lot faster in options compared to Forex?
So I've seen the stats on the prop firms. I think the top, what was it, FTMO, they said that the top traders make about 3%, like the top traders make about, I saw that news article or something. But the main thing with options is you don't need that much capital, right? Like, because some of these option contracts, of course, like some of them are going to be like $20, which is about $2,000.
So how much money do you need as a beginner to actually be worth someone's time? that you can actually pull out $1,000?
I would still enter in with about $2,000 to $3,000 just to enter in and see how the market actually moves. The main thing I always tell everybody in the beginning is you're gonna lose money. You're 100% going to lose money in the markets, especially with options. You're 100% going to lose money, right? And so the main thing that I tell them is just come in with money that you are willing to lose. This money, you are going to lose it for a fact, but it's your learning phase, right? And because of that, that $2,000. I've seen people, for example, you were asking about the dollar value, right? Like how much you can expect it. I've seen people come in with $2,000 and turn it to $60,000. I've seen people lose $2,000 in like literally 10 minutes, right? So that's the thing with options, right? It's the volatility in options. For me personally, like on average right now, like I'm probably having anywhere from $50,000 to $80,000 months on average currently. But
with $100,000 of capital.
$100,000 of capital, but I don't use the $100,000 of capital on every trade. I use probably much less than that. I probably use on average $30,000 on an average.
So
trade.
You're doing a 1 to 2, 57% win rate, but your percentage again, your initial capital is vastly disproportionate to what it could be in Forex.
Exactly.
Exactly. I was hunting for the answer of why did you pick it? Why did you pick options?
That's exactly why, right? It's because you don't need that big of an account. Even some of the biggest, like I remember Umar Ashraf used to trade options as well, right? Like there's also other names in the industry as well, but they don't trade with the biggest account size. They don't need to. As long as you understand the thesis on the higher time frame, you can make a lot of money in options. You don't need a big account. Technically for me on an average, like I only need a $50,000 account. I have 100,000 when I see a really good A+ setup, I'll put that money in there. On average, like I probably need a $50,000 account. Most of my trades will be much less than that.
Big. Yeah, right. Because $3 million, when people say 3%, right, on $3 million, it's a lot. But if you have options, right, you're looking for that percentage gains. Me personally, I trade with around $50,000, right. If I'm scalping, right, on any average, I'll trade with the $5,000 to $10,000 position size, risking 10%. So I'll risk on a scalp. So let's say today, for example, I had a $6,000 position size. I was only risking 10% stop loss, right? So I was only risking $600, and I was scalping it, right? I took 3 partial targets, and that scalp ended up making me $2,500, right? Because I was trading momentum towards the upside. So I was only risking $500, but I ended up making $2,500 on options.
That's very interesting. Okay, when it comes to stocks versus Forex, which is what I want to kind of compare, would you say it's equally beginner friendly? And because the barrier to entry is actually less, you need less capital unless you go with prop firms, and there are certain advantages, certain disadvantages. Using those two for a beginner, or if you were to do it all over again, would you still pick options as the vehicle in life?
I think, well, the question's going to be biased because of course I trade options, right? And I've seen the Forex.
No, it seems like you've studied, you've watched Forex as well, so you're not oblivious to it. So you could have had a decision to swap over or anything.
Exactly. The reason I think I didn't choose Forex was just because of like the regulations, and like there's a lot of dark side in Forex where in options everything's regulated at the end of the day, right? So I didn't really the main reason is I learned most of the things I learned was through online information, right? Like because I come from a very, very small town, so everything I learned was through online information. And because of that, at the time, Forex, because there was not that many regulations, people were showing everything, like all the, the unregulated brokers and everything like that. I knew I could trust the option side and the stock side more because everything is regulated, right? And that's why I chose it personally. Now, when you look at the actual like dollar gain or the actual trading performance on each, for me now, like options just make sense to me. Right, like options just make sense. And if I ever want to trade from options to go to futures, I can, because it's very, very similar, right? Now with futures, I just wouldn't have to worry about the Greeks. But futures, the way I would trade it would be the exact same I trade options with. You get what I'm saying? So
tapping into a bit of trading psychology. I'm sure there's plenty, probably the equivalent, the psychology issues that traders face in Forex, probably exactly the same. But you also have the other elements we've mentioned that you have that I wouldn't have to face. Therefore, what would you say is like the biggest psychology components or biggest emotions traders may feel in options trading that you've had to tackle?
Yeah, so the two biggest are fear and greed, 100%. That's with any trader. It's going to be fear and greed. But
is that amplified knowing the expiration?
In options, the greed, there's 90% of your emotions will be greed. It's even me, right? Like when I first started, right, like I would be up, for example, 300-400% on a trade. I'll give you an example actually. When I was first, there was when I first started trading, there was a stock VPER, right? This was it was a penny stock, and I was up 5,000% on that trade, 5,000%, and I ended that trade red because I was like, no, I'm gonna wait until this stock hits. If it hits $1, I'll make $1 million. If it's $1, I'll make $1 million. And I kept thinking, this was when I first started, right? This is when I first started, right? Okay. And so I was like, the greed emotion right there, right? It was really, really high. And options, it's the same thing. Everyone comes in because they see these Wall Street bet guys, or they'll see someone on Twitter, they'll see someone on Instagram, right? They turned like $50 into $5,000 in like 10 minutes, right? And so the greed emotion in options is the most amplified emotion compared to any other financial instrument you can trade.
Interesting. And what do you guys do? What can you guys do to combat that, or maybe satiate it or suppress it?
You need to look at the data, right? Like if you actually look at the data, you understand you're not going to take those 10,000% trades. Like there's no way your whole position size is going to go 10,000. It's not possible, right? Like the main thing is you need to understand you have to come into trading with a systematic approach. If you don't have that systematic approach, then even with your emotions, like for example, for me right now, right? Like yesterday I took a trade and the trade was really good. Like the overall, like the thesis of the trade was good. The risk management was good. I scaled at my partials. But after I finished that trade yesterday, I was up 34,000 at one point, but I ended the trade at 22,000. And like later on in the day yesterday, I was like, man, I was up 30,000 on that trade. Like, you know, like why didn't I just scale? But then even now, I know it's systematic, but at the end of the day, you're a human. This psychology aspect of trading, I don't care who you are, it will always remain, like you will always have that greed or fear. But now, especially in options, right? It's that greed. And you just have to understand at the end of the day, you're not going to take, as long as you can get the one thing that one of my mentors told me is, as long as you can get the big chunk of the move, you don't need the whole move, right? You don't need the whole move. As long as you can get the big chunk of the move, who cares about the whole move, right? You have multiple trading opportunities in the next weeks, months, years, right? So that's how I kind of look at it now.
Yeah, it's interesting because I've been in the markets for 8 years, so I've got a decent amount of experience. And whenever I look online and even speak to guests on the show, a lot of people that are very pro psychology and say psychology is 90% of trading and that on that end of the spectrum, I think sometimes there's elements of overthinking. There's like, oh, it boils back down to your childhood traumas. It boils back down to your marriage and relationships, which maybe for some people, but I don't think that's for everyone. And the way I've kind of looked at psychology is, unless you have anchors in your life, like if I'm in debt, I have an issue that probably is going to weigh on my mind and be an anchor in my trading. If I have particularly bad childhood, that's going to be an anchor. If I have certain externals, there will be anchors in life. But that's if you're neutral as a person, you don't have anything really weighing on you that much. I think more than focusing on meditation and self-help and affirmations in the mirror, it's better just focus on experience and letting probability play out and time in the game, because, you know, as we've discussed, probability does play out. So if I get greedy and deviate away from my plan, instead of meditating on it or journaling on it, I just know, okay, deviating away from the plan, maybe short-term benefits me, or long-term it skews my data, and that has a butterfly effect, has a domino effect. So I don't do too much for my psychology, even though it might seem weird to some. It's like, I've just been doing it long enough. I've seen enough price action. I've seen enough trades. I've lost so many trades. I've won so many trades. Like it's not a weird feeling to me. So when I get greedy, instead of saying, okay, let me have a coping mechanism for it, I just come back to exactly what you said. Come back to the data, and instead of doing escapism and working on my mind or whatever, I'm just like, okay, well, that's not the right thing to do, and just be restricted and fix on my mantra, which seems like an easy fix, and easier said than done to a beginner, but I think that's probably the best answer for psychology.
I think in the beginning, what a lot of people do is they focus too much on psychology, because that's what social media preaches, is psychology plays a big role. It's easy to pin it on that.
Like if you've got a crappy edge and you don't know why you have a crappy edge, because you believe your mentor so much, but maybe he doesn't know what he's talking about. And instead of focusing on the real issue of finding an edge, you're just like, it must be my mind. It must be my greed. And the elephant in the room is probably the one you need to address.
100%. Yeah. I think the main thing that newer traders should focus on is definitely creating that edge, curating a strategy, worrying about the risk management. Once you have the technical part down, then I would say psychology comes in and play. Because if you're first starting out, if you're not executing the trades, your psychology doesn't matter, right? Like, why does psychology matter if you don't have a proven edge, right? But once you have that proven edge, I'd say psychology does become a bigger factor after in your trading career. Once you've had that edge, once you have the strategy, once you have the risk management down, then psychology plays a role. As a new trader, psychology doesn't play a role until you actually start executing. But you shouldn't be executing because you don't even have a strategy yet.
The way I see it is, like, psychology will modify your adherence to the plan. So if I have the exact same strategy as you, and we have different profitability at the end, that differentiator is probably only psychology. And that's the argument they have, is like, if you have the same strategy and two people have different outcome, it was their mindset that was different, and it makes sense. And what's going to cause me to take a different decision to you if we have the same plan is because I have particularly more greed in me. I'm a bit more risky. You're maybe more risk off. Whatever these differentiators, and therefore people will say that's what you need to address. And there's elements of truth in there. I see where the argument that I've had to me is, if you are a very pessimistic person, you'll be different. If you were born and you've been watching a crypto bull run, you're used to things working out, you're used to things playing out. But if you were born in an area where you face the recession and everything collapses, you're more framed in that. And even myself, because someone posed it to me, and I actually thought of it, I was like, out of my trades that I actually execute, I think like 70% of my trades are sells. And I was like, why? Because my strategy is not only for sells, but it just happens to be over a long term I take more sells. And what I started to do was flip my chart. If I need to see a buy, I flip the chart to make it look like a sell, and to do these tricks. But when I asked that to I just did a pod with Abdu is from Montreal. He's a Forex trader, and he was and I was like, what do you think that could be? And he was like, well, it could be a couple of things, more because sells usually happen quicker in the market. Sells are more aggressive, and buys are usually slower trends. So it could be a case of you like fast results. So there is more to it, and maybe I'm also not well versed enough, but in the end, I think your technicals can carry you a long way, and that's where most people's focus should be. Do you believe in like the other stuff that you see on social media in terms of like the meditation, journaling, the cold showers? I don't know, all of the stuff you see. Is that in your life? Is
the
that
one thing about I want to touch about on emotions as well is that a lot of people feel like as a professional trader or like one of these top traders is that you're gonna feel zero emotions, right? Well, you have to understand exactly. Yeah. Emotions are part of humans, right? That's a part of the game. That's what I realized, especially because I used to think I would see online and everyone's be like, "Oh, be emotionless as possible, right?" You want to try and be as robotic as possible, but you're always gonna have that fear and greed, like no matter what, right? You just want to minimize it, and then you base your actions, right? If you're technically you could have emotions, right? But it all depends on how you react to that emotion, right? Are you going to make those emotional decisions, or are you going to stick to your plan, stick to your system, and actually execute properly?
I think just adding on to that, when you said the meditation part, I tried the meditation part because I was like, everyone's telling me to do it. Let me do it. Let's see how it works. It didn't work, right? But what works for me though, what I will say about the psychology part is not meditation or any of the stuff you see, but it's about discipline, right? At the end of the day, because you need to take that trade and you need to take it with your actual strategy. And one thing that helps me for that is discipline. So discipline just means going to the gym every single day. It's very, very simple actions you do on a daily basis that if you do it consistently enough, right, it'll become habit, right? And so therefore, the only thing I'll say about the emotional part of it, right, it's not about meditating. It's not about going and doing like these yoga retreats and stuff like that. It's about actually just being disciplined. Like if you are not a disciplined person, if you can't come to the market and backtest every single day when you're first starting to be profitable. When I was first starting to learn how to trade, I was probably on the screens 100 plus hours a day. Plus I had university, right? Plus I was working full time, right? So it's like, if you want to make it work, you will, but how will you make it work? Through discipline, right? Because once again, motivation won't cut it. You'll watch one, TikTok reel or something.
Comes and goes.
Exactly. Right.
You gotta fall back on it.
Yeah.
With these things, I think it's also a case of if you're disciplined in the gym or those things that you hear, there is an element of truth because it does bleed through. It's like how you do one thing is how you do everything. And if you're not disciplined in life, you're probably not going to be disciplined in the market. So that does bleed through. One thing that I heard somewhere on a podcast, it resonated with me that we have our reptile brain, they call it. It's like the oldest part of our brain, and then like consciousness that we have, and what makes humans different to animals is that consciousness. That's something newer. So but we still have the ancient evolutionary whatever. We have that reptile brain, and that's where emotions come from, because animals don't have thought and decision making. They just have emotion and reaction. So we still have that in us, and that's what's probably coming out in the market. So the guy said the communication between your subconscious and your conscious mind is the emotion. That's how your subconscious and conscious mind communicates. Now the difference is language is how we think in our head. We think with words. But words are very one-dimensional. Let's say, for example, if I'm thinking of something, I'm telling a story about, let's say, a war. That war in my head can be so many flashing images. It could be trauma, it could be planes, it could be tanks, it could be so much going on in my head, and this whole 3D, 4D emotional thing going on in my brain. But then I say the word war, and that's a one-dimensional word, and the idea being is like, hopefully that word goes to your brain and those same images pop up, and that's how we communicate, from 3D and visuals to words, which is limited. But our thoughts in our brain is words, it's limited. So when we have these emotions, those emotions are stemming so much long-term from your childhood maybe, and the emotions have so much data sets. So when we have all of this going on, and it bleeds through into our from subconscious to conscious and comes out as words, we don't know how to define it. We don't know what these emotions always mean. And I think a lot of problems are solved by just knowing what does it mean? What does that emotion mean? If I'm feeling greed, there could be a million reasons for it, but why is that emotion coming there? Not removing it, as you said, but why is it there? And then more importantly is what you do with that emotion. Okay, I might feel really, really like I want to get in the trade, but if I don't get in the trade, well, the emotion didn't matter. I just felt it. So this idea of patience, which traders have, I really struggle with patience. Okay, yeah, you are impatient, but it doesn't mean you have to take a trade. You just need to do something else in the meantime. The solution to impatience is find something to do to not make you want to take the trade. So I think psychology is something that's really overthought, but it's just like, okay, what is your actions to the emotion?
Exactly.
It doesn't matter about where they're coming from, really.
Exactly. I think one of the main things is like the difference between IQ and EQ in trading, right? So IQ is obviously your intelligence, and then EQ is your emotional intelligence. One of the main things, a study that I actually read, was your EQ as a person, and this might relate to you, right, is higher because you're bilingual. That's a proven fact. If you're bilingual, because then you have multiple words to actually think about that emotion. What you just said, right? Think about it. You think about war, but then you think about it in a different language, right? And the way you perceive that word is now different because of the childhood you came up with, right? So does that make sense? So that might be why you are a little bit better emotionally, right? Because you know how to look at, for example, a trade, right? But then in your head, you may be, for example, let's say you're thinking about it in English, but then if you think about it in a different language as well, the perspective you have on that trade is going to be different from someone that just has, that's a study that when I read it, I was like,
it makes a lot of sense, though.
Like, you know what I'm saying? Like,
more because you've had time in the game, I've had time in the game, so we've seen a lot of things happen. And you also have the confidence score, which is confidence, like what I think is going to happen is going to happen, the percentage of it. So I'm very confident is because I have a lot of data to support my thesis. That's all confidence is. And if people don't know what the confidence is, so it's flimsy. But when you define it like that, when we've seen so many things happen, we already know what's likely to happen. So we don't need to deviate away from it too much. Upon this intelligence thing, let's say, intelligence is also, people think you need to be very intelligent to trade. It's like, no, intelligence is just how quick you learn. How quickly you pick something up. A very intelligent person will pick up something very quick, and another person won't. But you can still pick it up. It just takes a little bit longer, and that becomes another anchor that people use. I'm not intelligent enough to be trading, but no, you just need to put a little bit more effort.
And to add on to that point, I thought the exact same way when I was first learning with the IQ situation. That's why I really preach that now. Whenever, if you watch a video of mine, I literally preach about how IQ is not really important. Because when I was in school, for example, I had the highest average in the class. Like, I was always super smart in school. But then when I started trading, there was people that I knew, I'm like, this guy does not have a higher IQ than me. But then I'm like, this guy's a profitable trader. How? Right? And then that's when I started, like, I was like super like mad at myself that like, why am I not picking this up? Like, I thought my IQ, like, I should be smarter than this person. But then I realized, no, it's not even about the IQ. The IQ will just help you pick up the technical part of it. After the technical part, it's about yourself as a person and how much you can follow your system. That's all it is at the end of the day, right? So
I think maybe for someone like you and even myself, academically, I spent university and everything, good grades. In life, we were framed in a way of like, the harder we work, the more we do, the better our results will be, my better the grades will be, and we rely on that. And that usually comes with a bit of pride, high self-esteem and ambition. These are all great things, but in the markets, it's not a good thing, actually. Because I've also had interviews with people that openly say, they're like, I'm not the smartest person, but it helped me in trading because I just don't overthink it. And I just got into crypto and I didn't even think about it too much, and it worked out. Like, there is probably a sweet point where it's not the highest IQ. And the reason I say that is because we all have a lens on the world. And just like the example of if you're born in a bull run versus born in a depression, you probably view risk and money a little bit differently. If you're coming from an immigrant family where money was tight and your father is your superhero in life, you will have those traits in you. Whereas if you come from a wealthy family, it's probably different traits. So we all have different lenses, and I'm not the most aware of it, I'll be honest. It's something I'm working on. But when I was doing, I did a period of Twitter live signals. I was giving all my trades out, all my wins, all my losses, entry, stop loss, explanation, kind of like what you're doing with the live streams. And I've weathered storms in my life. And so when I told them my win rate is 50%. So expect half of my signals to be losses. And again, I don't know if my wins and losses will come win, loss, and everyone's happy, or 5 losses in a row. So when I was doing these public signals, I was up 40%, and that was 40% in 14 weeks. But the problem is someone joined on week 12, so they didn't win that previous period. And let's say I took 3 losses in a row, people were going crazy in the comments, like, I could see they were emotional, not blaming me, just emotional. And in my head, I couldn't fathom. I was like, well, I told you it's 50% win rate. They were good trades. They were high quality setups. Let probability play out, but they just hadn't experienced that before. And I think just experiencing something again and again calms you down, calms the emotion. And the solution to that guy in the comments wouldn't be go meditate and XYZ. It's just take a few more losses. It works out. And I think experience in the game is a bigger factor than intelligence, than how good your strategy is, how good your psychology is, what your child is like. It's just experience probably trumps all. And I think what the concept I have is like an exhaustion curve, where the biggest traits as a trader is just how long you can survive. Just don't get scammed along the way. Just don't give up. The idea in sales, like if you're just knocking enough doors, eventually you gotta sell. Like you gotta stay in the game long enough to just allow probability, time, experience to manifest. Those will carry through everything. Anything else you guys want to say on the topic of psychology that comes to mind?
Yeah, I think with the experience thing, that's a great thing to kind of mention on, because, for example, for me, like I can tell you like from personal hand experience, like when I first started making money trading, right? Because I was on social media my whole life. I've been growing up on social media. I know everything about social media. And therefore, when I first started making money trading, what did I do? Right? The most irresponsible thing possible, right? I started doing everything that I saw online because I was like, this is what I was supposed to do. Like now that I'm making money, like I should be doing this.
The trader lifestyle.
So the trader lifestyle. Yeah. I financed my first Lamborghini and then I went and bought the biggest house. Like I did everything. Why? Because that's what I thought I was supposed to do. Like that's how my psychology, like it was flipped in that way where it's like, you have to do this when you become successful. But then quickly in like probably like less than a year, I was really, really like, I wouldn't say depressed, but I was just like, what am I doing? Like, what is going on with, like, this isn't what I'm supposed to be doing. And one of the main things that one of my mentors told me is like, yeah, it's because the rate in which you get money, right? You lose the money, right? You've probably heard that before. Like the faster you get money, the faster you're going to lose the money.
What happens fast doesn't last.
Exactly. Yeah. And though my trading journey wasn't fast, by no means was it fast. I was literally unprofitable for 3 years, but the amount of money that I made very quickly was fast, right? And so I thought I was on top of the world. I cracked the market. Let me do this. Let me do that. But then very quickly I realized like, no, like I can't sustain this lifestyle that I like, this huge lifestyle that I'm trying to like sustain or whatever. Who am I doing it for? At the end of the day, if I'm not happy, like why am I doing it, right? So I think for a trader, what's really, really important is because your psychology, even if you become profitable, right? You're like how you said, your childhood, your trauma, whatever, like you want to prove to other people that you did it, right? That's what you want to prove to other people. For me, for example, like I came from government housing, like my parents came immigrant, right? Like they didn't understand English or whatever. And so since I came from that, I wanted to prove to other people, like, look at me, I did this now, right? But very quickly I realized, the experience made me realize this, that like, why are you doing this? Like, you're not even like, you're not happy. No one actually cares at the end of the day what you're doing. So it's the fact that in trading, you have to keep that ego very down, right? That's a one part that I missed on before with the fear and greed, is your ego. Once you become profitable though, your ego will increase because you're like, especially if you're taking trades live, for example, for you, right? Like when you took those trades live and you were winning, for example, and you said like the first couple of weeks, your ego was like, even if you don't want to like say it, right? Like you definitely were like, you were getting more confident in those trades. You're like, yeah, like other people like are seeing that I took this trade. Like it's really good. Same thing with me when I was trading live. I was like, yeah, like I took that trade live. Like everyone saw it. Like, you know, hundreds of people saw it. But then you have to like, when you lose a trade, the same thing will happen. It's like, you like, even for you, you're like, damn, like, you know, I lost that trade. But then like the one guy will be like, it'll take one negative comment and then the whole day you'll be like, why do you say that?
It weighs more. It weighs more than 1,000 positive
exactly.
comments.
Like you could be for weeks you can be green, and then that one negative comment you see, you're like, man, I did lose that trade.
You know, like, a switch I did, and I had the same thing. We're doing a route in life that is not regular, and a lot of people think it's not going to work out. And in the beginning, when you're putting all these hours in, and your parents are asking you like, "Hey, how's this trading thing going?" and you haven't got anything to show for it, you're probably getting external judgment. You're also doubting yourself. If you're losing money, that is also thinking like, "Is this all a scam? Does this all work?" So we come from a base of a lot of emotion there, and the moment we get a bit of success. If I landed a job as a dentist that I am, I wouldn't be, if I made $10,000 in the first month, I wouldn't celebrate like, guys, look, I made 100%, that's my job. I got 100%. Paid. But in trading, it's like the odds are against us and it's such a burden, and we want to prove to our parents, we want to show everyone works out. So the moment we have something, we're like, hey guys, look, it worked. It was worth it. And also survive long enough to get to that point, because if you've got doubts and you're taking losses, those voices can consume and you give up, and a lot of people just go back and don't see it through. But that's kind of the chip on the shoulder. And what I modified, and I've done this a long time ago, even before I was profitable, was I used to weigh a lot on my parents' judgments, my friends' judgments, and in high school I wasn't the cool kid, let's say. So you just always want someone's validation. You just want to fit in. And I was a brown guy in a white school. I wanted to fit in, and all of these things would make me really insecure. And therefore, my judgment was external. And what I switched very aggressively, and I forced myself to switch, was my greatest judge is my future self. My echo chamber is not other people's voices, because they're going to be dead soon, and I'm going to be dead soon. What does it matter? And I just look to internal validation. Will my future self be proud of me? And as the moment I got good grades, I literally sat to myself and said, I thank my younger self. And I had that almost conversation with myself, like, my younger self is a legend. So I think of myself like that, versions of me. And then I think to myself, now all the things I've got now is because of my previous self, and I thank him. So now I always think to myself, what can I do today so that I say thank my younger self of today in the future? And that was a big shift for me. And I couldn't care less what people think. And even in the live trading that I was doing, it bothers me a bit, but not actually as much as people would think. And even the wins, the highs of winning trades, it didn't faze me as much. And I'm a very like stoic person, very controlled in my emotion, which also has negatives in life, with friendships, with family, with partners, sometimes a bit too detached. And I've also seen it manifest in the wrong way. But I think as a trader, you need to be that resilience, and to gain that resilience, you have to go through the opposite. Meaning to say, if you want to be a very calm person, you have to go through anger to learn how to be calm. If you want to be a patient person, you have to go through periods of greed. So therefore, any turmoil you have in life is going to get you the traits you want. So whenever I've been in a period, and new traders are going through a period of something negative happening, know that that's how it's going to get you to the positive you want. You can't be a resilient person if you haven't been tested. So to gain the trait you want of resilience, expect to be tested and embrace that test, because that's how you're going to get the trait you want. And I think that lens frame of my judge is my future self, and the turmoil leads to the result I want, I embrace everything head on. And I think that's been a paradigm shift for me that helped a lot. Where I want to take things to wrap up is two areas. One, you mentioned like the trader's lifestyle and the expectations we have, but also when you make a bit of money young, naturally you wanna spend it, and that's, I don't think anybody's not going to do that. What did you kind of do in the earlier days? What was the damage when you started to see a bit of success? Young guys, where did that take you?
Yeah, so for me it was, and I've talked about this before publicly, like I'm pretty transparent about this, is one paradigm shift that I had as well was taking the external validation and putting it internal, right? Like now I only care about what I think. I really don't care what others think of me anymore. But growing up, like I said, like I lived in government housing for 16 years of my life. And so most people, like I wanted to prove them wrong. And especially when you tell people you're a day trader, I don't even tell people I'm a trader anymore. If they ask me what I do, I just say finance now. And that there's a whole different reason for that. It's just, I just say I'm a dentist. Yeah, I just say fine because it's too much when you say,
I was at a wedding just now, right? And all the aunties are coming to say, hey, what are you doing? I don't want to explain the whole thing. I was like, I'm a dentist. I was like, I'm in Dubai. I was like, I'm dentist in Dubai.
Yeah, exactly. It's just more easier, because then they'll ask you questions, or they're gonna be like, oh, so like, what do you do exactly? And then they'll be like, can you help me make my, what? That's a whole
the uncle always comes and says, hey, I'll give you money.
Exactly. Every single time in the beginning when I'd be like, I'm a day trader, if I give you $10,000, what can you do with it? It's like, I can't do it. I don't know, man. Like, I don't know what I can do. But so in the beginning, what I basically did was, the first time I made it, so I have on my Twitter, that's when I started Twitter, I had $100,000 month. It was my first $100,000 month. And I still have it framed on the wall, the actual broker statement, but I posted that. And I bought my first car, which was a Lexus ISF Sport. And I bought that, and people were like, wow, like that's sick, like cool, man. And then I was like, that's not enough. I was like, I need to do more. So then I went and bought a Lamborghini. And everybody, because a kid from government housing in a small town, everybody in that city instantly knew. They were like, wait, what did he do? There's no way he did. And I was like, and that validation that's externally, I was like, that was a dopamine hit I've never hit. And because there was points where I was picking my siblings up from high school, and like the whole school was taking a video and stuff like that. You feel like you're Drake. And so you know what I'm saying? It was like, wow, like I was like, damn, like I did this, whatever. And then like very, very, like it took probably like 2 months, 3 months of super, super highs. And then I was like, after that, like it would still happen, but I'm like, okay, cool, like this is happening now, but it's like, is this actually like what value am I giving to other people? Like this isn't like helping anybody else other than me and like my ego, right? And at the end of the day, like I talked about earlier, you don't want an ego in trading. And so really, really quickly, I was like, all right, I gotta stop what I'm doing here. And what I shifted towards is now, for example, 80% of the income I make from trading, I literally just made a video about this, breaking it down, but 80% of the income I make from trading all goes into investments or something like that, I only use 20% of the income I make from trading. This way, it's much more sustainable. I don't need to, my fixed expenses are very, very low. So even if that month, for example, I'm unprofitable that month, right? Because you have down periods in trading. Let's say that month I don't make money in trading. I don't care. I have enough money, now where I can sustain the lifestyle that I have right now for the next 10, 15, 20, 30 years.
And what stops you chasing that high again? Or, let's say you've had 100K a month. What stops you saying, I could buy a fat watch or, get another car? What is controlling you now?
It's the validation like I talked about, right? Like before, the reason I did it, what was the purpose of me doing that, right? Yes, I like cars and stuff like that, but it's like the main reason was like for other people to see that, oh, I bought this car, look, I'm successful now, right? But now it's like, I don't care. Like I really don't care what other people think anymore. Okay. And now it's more for me, it's like, how am I going to set up, because I'm still very, very young, but how am I going to set up the income I have now, because I have a decent amount of income coming in? How do I set it up for other people in my family? How do I set up my dad for retirement? How do I set up, the generations I'll have? How are they going to be set up, right? So now my main thing is just real estate, e-commerce stores, and just investing very, very heavily into that. And that's been going super, super well.
Me too. I had the same high thing, and mine was at university. So I'm a student rolling up to lectures. Everyone in the clinic seeing me rolling up in a nice car. That was a sick feeling.
Exactly.
But now when I live in Dubai and everyone has a Lambo, everyone has a Ferrari, and I see a Rolls Royce every 10 seconds, I realize, well, no one's going to be impressed. Like literally, I'm just another Lambo on the street. So for me, it was the environment that changed it for me. It was like, oh, I'm never going to be the big guy in this town. So just carry on doing whatever I want to do.
I actually agree with that. So I just went to LA like last month for a month, and I realized, like, I obviously started traveling as well and seeing that, and that is 100% a factor, right? Like when you first start making money, right, like it's your network as well, right? Like my network before, like to them,
you upgraded them.
Exactly.
So you're the big guy. Yeah.
Exactly. To them, it was like, this kid has a Lamborghini. That's insane. But then now, like the people I talk to now, like for example, even you, like who cares? Like at the end of the day, like now we've seen people with like Bugattis, literally, right? So it's like, who cares? Like it doesn't matter to the people you talk to, and the people now that I talk to as well, like just the network, they're only focused on value creation, right? So
it's interesting because the way I've looked at it, and I think it's similar for everyone, is you go through a journey as a trader where it's like you're from a small town, so around you there probably wasn't many people that were trading that understood you, and therefore you start to end up isolating yourself because no one understands you, and you go through a lonely period because you haven't got the results, and so no one is agreeing with you. Maybe some people are making fun of you, maybe some people are whispering comments about you, whatever. So you end up going into a solo mode until it works out. And then that's a lonely period because your friends are going to say, hey, come hang out, come do whatever, but you're busy doing your thing. So you end up in this isolation where it hasn't worked out yet. And that's the lonely period where a lot of people quit. But then the moment you get a bit of success, you want to show those people, say, hey, look, it worked out. And you want that validation, exactly as you were saying. But then when you find, looks like you two have, you found people that are aligned, they're on the same mission, they understand you. They become your new friends, and they become better friends because you have more in common, same mission, same goal. You went through the same journey. So then those old friends that you had, you kind of naturally you pull away from people and you find your new people. And that's what happened to me in Dubai. Like the circle I have now compared to my circle at school or uni, it's a different circle. Everyone I know has done well. Everyone is young. Everyone's probably worth similar or more than me. So all my friends have APs and Patek, so what the hell am I going to do? Pull it up in a... So it doesn't make a difference. Yeah. Now, all of the conversations we have, and I made a tweet about this, it was so funny to see the perspective of probably my younger self in the comments, which is like, I made a post of like, every conversation I've had, I go for dinners quite often in Dubai, I'll invite two friends, they'll invite plus ones, and it becomes a table of 6-7 people. I network a lot in Dubai, and every single conversation is about business, money, growth, habits, religion, networking, like these kind of topics. And all the conversations I used to have were nothing about that. 100%. And I made a tweet about it, and the comments were just like, sounds so lame. That's how you talk about, or why are you trying to be so like spiritual and pretentious? Yeah. Or it's like, no, it's not like we're better than you kind of thing. It's like, well, what else am I going to talk about? If you're killing it in this and I'm killing it in this, let's exchange. What can we learn from each other? Like that's the fun conversation. And I think that's just natural evolution in life. And then your validations change. Now I'm not trying to show him a fancy watch because he's got a fancy watch. Now it's a case of look what I pulled off last month. How did you do it? I did it like this. This is how my team's growing. And then they say, oh, this is what I tried. And that's epic stuff. That's the people I want to be around. And that's what I'm hungry for. And it's not a case of we are chasing money, which can seem quite superficial. No, we're chasing kind of excellence and growth and cool people, cool environment. And what else will we be doing with our life? What I want to kind of summarize the podcast with, we're still young. And though we may have achieved a good amount, it's in the grand scheme of things, we haven't achieved a lot. where do you want to go in the coming years? What do you want to achieve? What are those things on your goal list?
So my main thing right now is just to, like I said, is just to create that, like, you know, long term, because everyone in trading, like, though most people come into trading looking at that short-term time frame, right? Like, how do I make a lot of money? Now, once you actually become a profitable trader, you understand that you shouldn't be looking at it like that anyways. But the main thing for me is now to create value to other people, and the main thing I'm doing right now is real estate. So all the money I'm putting into that I make, it's going right into real estate, right? And making these, because I used to live in government housing, so it's not like I'm putting like real estate and like buying these like next like commercial buildings or anything. I'm actually like buying these small it's called Section 8. Do you know Section 8?
Yes, I've heard.
Yeah. But like my price, like the pricing I have, like I'm not saying I'm charitable. I'm not saying I'm charitable or anything like that. The government does pay you, but in Canada it's a little bit different. Where let's say the average rent for that house is $1,500. Every single house that I have rented out right now is $1,000. Just so like it'll help people that are coming to this country with like you know, and there's a lot of immigrants coming into this country right now, and so that's the main thing that I'm doing right now, is just to build not only like because I'm still young, I don't want to say the word legacy, but like it is to build something in my city where people know, like, you know, I did this, and create, you know, kind of a name for myself in a good, positive way. That's the main thing.
So this is interesting, because a lot of people, when they find a bit of success, they leave the hometown. I did. A lot of people, my friends in Dubai, they all left the hometown, and usually people probably went to Miami, LA. I don't know where people go in the US, but usually people don't stay in their small hometown. It seems like you want to stay and build there. Why is that?
The reason I want to stay there, because I've been to LA, I've been to Miami, and I've been there, like, it's not like I've been there for like a week. I've been there for like months and months at a time. And the main thing is, in LA and Miami, it's like, it's really good for networking, and I go out there to network and, you know, still experience that lifestyle and stuff like that. But in my hometown, I can just work so much better. The work ethic I have at home is unmatched. Like, I can work all day around the clock at home, and it's just I don't have, like, I'm not like having like, you know, like, even like at the end of the day, it's like if I'm in Miami, I was in LA for example, right? And I worked for probably like 8 hours in that day, and then I was like, at home I would have just continued, like there wouldn't be no thought. It would just be like, okay, continue working, like keep doing whatever you want to do. But then in LA I was like, oh, you know what, like I did enough work, like maybe it's time to go and chill with the boys, or go do something else like that. And it's like, that's good if you're networking, right? And of course the people I'm hanging out with, it's like they would have been a good time, like regardless, and it would have been like a valuable information that I would have learned. But it's still like I would be wasting time for the crucial things that I'm doing, right? Like actually like going through and looking at the trades I'm taking, or even just running the real estate. I can't move to Miami and still manage the real estate that I have in, you know, my town, or just in the GTA in general. So it's just not something I can do right now. But overall, I think the goal is to move within the next couple years. But right now I just want to build up a good, strong foundation.
Where would you go?
I don't know. Yeah, I honestly
have a city in mind.
It's either
somewhere
Dubai,
where there's no taxes.
it's either Dubai or Miami, probably.
Oh,
honestly.
epic! Then I'll see you in Dubai.
It's probably
for sure.
Dubai or Miami.
How about yourself? What is up on the horizon for you that you want to hit?
Yeah, for me, right, I'm obviously not on his level yet, but my main goal is to retire my mom, right? She's still working every single day, right? Has a minimum wage job. Like, that's mainly my goal, right? First, taking care of my family, and then splurging on other things first.
Excellent, man. Boys, I've really enjoyed this episode. I think it's one of the better ones. So hopefully the viewers too enjoyed it. But gents, thanks for your time and coming on. It was a good one.
Thanks for having us. Thank you for having us.
Boom.